Hello everyone, this is Grace here. In this video, we will be discussing problems on flexible budget. So the first problem what we are going to discuss on flexible budget is illustration 10. So why is flexible budget is prepared is as we have gone through the theory, we the difference between flexible as well as fixed budget is given. So flexible budget is very easy, and which is effective while for the industries to be prepared, because it helps any manufacturing or any industries can adopt a usage of flexible budget. But when we use fixed budget, it is only for recording of a majority of fixed expenses, so it will not be very useful for all the types of industries based on their nature and the size of the business. So flexible budget is flexible for all kind of industries, irrespective of its nature and size of the business. So under that, we will be learning how to solve problems under flexible budget. So now illustration 10, Mahindra Co Limited, working at 50% capacity, manufactures 10,000 units of a product. Cost is rupees 180 and sale price is rupees 200. The breakup of the cost is as follows. So Mahindra company is working at 50% capacity. So they are working at 50% capacity, where they are manufacturing for 50% capacity, 10,000 units are being manufactured. Then the cost per unit is also given, which is 180, and the selling price is 200. So that means they have sold at a profit of 20 rupees per unit. So then they have given us material cost per unit. So in the question, they have given it cost per unit as 10,000, 3,000, 3,000 and 2,000. So it is not 10,000, it is 100 for materials. Wages is 30 and factory overhead is 30, administration overhead is 20 cost per unit. So you need to change that. Then material wages is given, which is where material is 100, wages is 30. When we come to factory overhead, it is 30, out of which 40% of the 40% will be fixed, and the remaining 60% will be variable. So out of 100% of factory overhead, out of 100%, 40% will be under fixed. So 100 minus 40 will give us 60. So 60 is variable. So next, under administration overhead, 20 is the cost per unit. So under 20, the cost per unit, they have stated 50% is fixed, so the remaining 50% will be variable. So at 60% working, raw materials cost goes up by 2% and sales price falls by 2%. So what they have given for 50%, they have given the data. Then they have stated, if you are manufacturing at 60% capacity, your raw material cost will go up by 2% and your selling price will reduce by 2%. Okay, fine. Next, at 80% working, material cost increase by 5% and sale price decrease by the same percentage, that is 5%. So they have also given here, if you are manufacturing at 80% capacity, then the material cost will increase by 5% and the selling price will decrease by 5%. So then they have asked us to prepare a statement to show profitability at 60% and 80% capacity. So now we are going to show up for 50% capacity. We will show up first because that is the original data. So for 50% capacity, where 10,000 units is manufactured, for that we will do the calculation and show what is the profit. Then for same thing for 60%, we will find out how many units. That calculation I will teach you. Then for 80%, how many units you will find out, and find out whether which among the three capacity which will give you better profit. So now let us get into solution. Flexible budget. So they have asked us to prepare for 60% and 80%, and we should also prepare for the original data, which is 50%. So it will be easy for you to compare. So now particulars: 50%, 60 and 80. So for 50% unit, they have given in the question 10,000 units are manufactured. But for 60 and for 80, they have not given how many units are manufactured. So we will do cross multiplication. So this is your cross multiplication, where for 50%, if it is 10,000 units are manufactured, then for 60,000 units, how much is it? So you will cross multiply. So 60 into 10,000 divided by 50, so which will give you 12,000 units. Then now we have found out for 60%, 12,000 units are to be manufactured. Then for 80%, how many units are to be manufactured? Again cross multiplication. For 50%, if it is 10,000 units, Then for 80%, how much is it? Cross multiply 80 into 10,000 divided by 50, which will give you 16,000 units. I hope you understood how you have got units, 12,000 units and 16,000 units. So now this is the question. So under 50%, 10% units. For 60%, 12,000 units. For 80%, 16,000 units. So now in the question they have given us material wages. So let us take first their direct expenses. Materials and wages, cost per unit is 130. So how many units are manufactured? 10,000 units. So 100 into 10,000, which will give us materials 10 lakh. Then for wages it is 30 cost per unit, so 30 into 10,000, which will give us 3 lakh. So the total, so the same thing will be applicable for 60% and for 80%. So now after finding for 50%, add up material and wages, where we will be getting our prime cost. So now the same thing will be applicable here. So we will find out the cost per unit for the, as the calculation for 50% is done, we have got the prime cost per unit is 130 and 13 lakh for 50%. Now for 60%, the materials is the normal material cost is 100. But what is stated in the question? In the question it is stated, if the goods are manufactured or at the working of 60%, raw materials cost will go up by 2% and sales price will fall by 2%. So the same thing is applicable here. Initially, how much was the cost per unit? Which is 100. So 102. So it is increased by 2%. So 100 into 2% will give you 2. So 100 plus 2, which will give you 102. So now wages. So the cost per unit will remain same. Based on the units, the total wages will change. So 30 is the cost per unit. 30 into 12,000 units will give us 3,60,000. Next, for 80% capacity, wages is 30 is the cost per unit. How many units? 16,000 units. So 16,000 into 30 will give us 4,80,000. So when we add up our material and wages, we will be getting our prime cost, total amount as well as per unit cost. So then after finding out the prime cost, we will add up factory overhead. So in factory overhead, what is stated is, uh, 30 is the cost per unit, out of which 40% is fixed. So now the factory overhead, 40% is fixed. So if 40% is fixed, so how much is the remaining, which is 60% will be variable. So we will write add factory overhead, 60% is variable, 40% is fixed. So what is the cost per unit? 30 rupees. So if you look into the question, cost per unit of factory overhead is 30. So this 30 should be divided into fixed and variable. So 30 into 60% will give us 18. 30 into 40% will be giving us 12. So now 18 rupees is the per unit value. So number of units for 50% is 10,000. So 10,000 into 18 will give you 1,80,000. Then 40% is fixed, which will give you 12 cost per unit. So the number of units produced is 10,000 for 50% capacity. So 10,000 into 12 will give you 1,20,000. Next, for 60% same, 18. This division is done as per the fixed and variable percentages. So 18 is the cost per unit. So the number of units produced, manufactured for 60% is 12,000. So 12,000 into 18 will give us 2,16,000. And for 40% fixed. So now 40% fixed. So we need to remember one thing here. You would have already learnt about this. When it is variable cost, the cost per unit will remain same. The total amount will keep on changing based on the number of units produced. But when it is fixed cost, the total cost will remain same. The cost per unit will change. So if you look into here, 40% is fixed. So initially how much we got? 1,20,000. So this 1,20,000 will be fixed for 60%, 80%. How many ever capacity you produce, only the cost per unit will change. So it is vice versa. Please remember, for variable cost, the total amount will change because as the cost per unit will remain same. So when the cost per unit is same, based on the number of units it increases, the total amount will change. So total amount will change in variable cost and cost per unit will remain same. But when it is fixed cost, the total amount will remain fixed, but the cost per unit will fluctuate. So the same thing is here. So here 12,000, 1,20,000 for 60%, 1,20,000 for 80% as well. but the cost per unit will change. So 1,20,000 divided by 12,000 will give you 10, and 1,20,000 divided by 16,000 will give you 7.5. So along with the prime cost, when we add up our works factory overhead, we will be getting our works cost. So for 50% we have got 16 lakh, cost per unit is 160. For 60% we have got 19 lakh 20,000, the cost per unit is 160. And for 80% we have got 25 lakh 68,000, and the cost per unit is 160.5. Next we will add up office administration overhead, which is 20 rupees 20 cost per unit, out of which 50% is fixed and 50% is variable. So now office and administration overhead, 50% is variable and 50% is fixed. So now here the what is the cost per unit? Cost per unit of office administration, 20. So 20 into 50 will give us 10, and so variable will be 10 and fixed will be 10. So 10 into 10,000 units will give us 1 lakh. So 10 into 10,000 units again will give us 1 lakh. So we have got variable as well as fixed cost for office and administration. So the same thing is applicable here. Your variable cost is 10, which will remain same. So 10 into number of units is 12,000. So as the number of units is changing, so the total amount will also change, which is 1,20,000. So same thing here, 16,000 into variable cost, which is rupees 10 into 16,000 will give you 1,60,000. Your fixed cost will remain same, which is 1 lakh for 50%, for 60% 1 lakh, for 80% 1 lakh. And the cost per unit will change for fixed cost. So for 1 lakh, it is, as we have found out through the percentage, it is 10. Now 1 lakh divided by 12,000 units will give you 8.3. 1 lakh divided by 16,000 units will give you 6.25. So now with works cost, if we add up our office administration, we will be getting our cost of production. So we have got a cost of production is, which is 18 lakh for 50%, for 60% is 21 lakh 40,000, and for 80% it is 28 lakh 28,000. So now along with this we will add up selling and distribution overhead, but in the question they have not given any information about selling and distribution overhead. So we will directly move, we will take it as cost of sales. So with the cost of sales, we will add up the profit. So now before we add up the profit, they have clearly stated that and sales price will fall by 2% for 60%, and for 80% it will fall by 5%. So initially they told in the question it was asked, so for 60% 2% will be increased, and for 80% 5% of selling price will be 5% of selling price, material will be increased. So the same thing for 60%, 2% was increased here, and for 80% 5% was increased here. So the increment was made here. Now when we come to cost of sales, here we will be increasing it. So we will be increasing with the selling price. So now we have got cost 18 lakh 21 lakh 40,000, 28 lakh 28,000. So now with this, the selling price will be calculated. So in the question they have given, for 50% the sale price is 200. Okay, you know the cost of sales, which is 180, and you know the value, which is 18 lakh for 50%, and you know the selling price as well, which is 200 rupees. So as you know the selling price 1 lakh 80 and 200, so the difference is nothing but 200 minus 180 will give you the profit, which is 20. So now 20 into 10,000 will give you 2 lakh units. So 200 into 10,000 will give you 20 lakh as your selling price. So now when we come to 60%, in the question they have stated, so 200 is your selling price, which is decided for 50%. Now for 60%, it is reduced by 2%. So when it is reduced by 2%, we need to calculate. So 200 into 2%, which will be giving us 4. So 200 minus 4, as it is stated, the sales will reduce by 2% for 60%. So 200 minus 4 will give us 196. So 196 is the selling price, and you know the cost price, which is 178.33. So 196 minus 178.33, you will be getting the cost per unit for your profit, which is 17.67. So now you have got the cost per unit. So when you multiply with the number of units, you will be getting the profit value as well as the selling price. Next, for say 80%, the same thing. It is stated that 5% will be decreased. So 200 is the value of the selling price, which is decided, into 5% of it will give you 10. So 200 minus 10 will give you 190. So you have got the cost of sales per unit, which is 176.75, and 190 is the selling price. So minus selling price and cost price will give you the profit, which is 13.25. So now when we multiply these values, that is profit values and sale value, with the number of units, you will be getting the profit and selling price amount. So now if you look into this position, so we have got profit as 2 lakh here, per unit value is 20, and for 60% profit is 2,12,000, which is 17.67, and for 80% it is 13.25, and it is 2,12,000 is the profit. So if you look into this profit for 60% and the profit for 80% is, the amount is same, but the cost per unit is fluctuating. So the cost per unit is 17.67. I'm sorry, there's a small changes in the profit, where 17.67 into 12,000 will give us 2,12,040, and 13.25 into 16,000 will give us 2,12,000. So this is the profit, and we have got the profit, cost per unit and selling. So now if you look into the profit here, for 50% we are getting profit of 2 lakh. For 60% it is 21 lakh to 21 lakh 12,040, and for 80% is 2 lakh 12,000. So there is difference in the profit, where we have got the profit is just 40 rupees more than 60%, and there is difference from 50% to 60%, from 60% to 80% only 40 rupees is difference, and the cost per unit is, for profit is 17.67 for 60%, for 80% it is 13.25. So next, they have asked, we have shown profitability here. So in here they have asked us the question: prepare a statement to show profitability at 60% and 80%. We have shown the profit as well as the cost per unit. To show the profitability, we are going to do a cross multiplication here, which is for 20 lakhs, the selling price is 200, which is for 100% of the selling price. Then for 20 profit, what will be the percentage? So that is what is profitability percentage here. So we will do the cross multiplication. For 200, if it is 100%, then for 20%, how much? For 20 rupees, how much is it? So for 20 rupees we will be getting 10%. So for 200, if it is 100, then for 20, how much is it? So 20 into 100 divided by 200 will give us 10%. Then the same thing will be applicable here. For 200, if it is 100%, then for 17.67, what will be the profitability, which will give you 8.081 is given here, but the actual answer what you will be getting is, for 200, if it is 100%, then for 17.67 into 100 divided by 200 will give you 8.835. So you need to correct that, which is 8.835. Next, for 200, if it is 100%, then for 13.25 percentage of profit into 100 divided by 200, which will give you 6.625. So there's changes in the profitability. It is 6.625 for 80%. So this is the profitability rate what we are calculating and showing here. So now the profitability keeps on changing, the rate of profitability keeps on changing based on the number of units you produce. So if you produce 60,000 units, you will be getting 12,040. If you produce 16,000 units of 80% capacity, you will be getting 2,12,000. So looking into this, which capacity you will be selecting? So many of them will obviously select 12,000 units capacity, because there is profit variation in it, where 40 rupees is more. So now let us get into the next problem. So the next problem is, the expenses for budgeted production of 10,000 units in a factory are given below. So they have given for 10,000 units, this is the material, which is cost per unit, which is 70, and labor 25, variable overhead 20, fixed overhead 10, fixed overhead amount, total amount is 1 lakh, and the per unit is given, which is 10. Variable expenses, which is direct, is 5, And for selling expenses, 10% is fixed. So if 10% is fixed, what is the balance? 90% would be variable. And distribution expenses, 20% is fixed. So if 20% is fixed, 100 minus 20, 80 will be variable, which is cost per unit for distribution expenses is 7. Administration expenses, it is 50,000, not 50 lakh. So 50,000 is the amount. So for 50,000 administration expenses, 50,000 is fixed. 1 minute. So 50,000 is given here. So full 50,000 is fixed. So we need to find out what is the cost per unit for that 50,000. So total cost per unit to make and sell is 155. Prepare a budget for production, 8,000 units, 6,000 units, and indicate cost per unit at both levels. So now we will prepare the flexible budget. Particulars, 6,000 units, 8,000 units, and 10,000 units. So now 6,000, which is given in the question, we are supposed to prepare for 6,000. For 8,000, 10,000 is the unit of the question. So as the question states that there is a production of 10,000 units, and these are the information given below. So now we will always prepare the units which is given in the question first for your better understanding. So 10,000 units will be replaced and 6,000 units. When you are writing down, please calculate in that way. So now here materials for 10,000 units is cost per unit as per the question is 70. How many units are produced? 10,000. So 10,000 into 70 will give us 7 lakh. Then labor, which is 25. So 25 into 10,000 will give us 2 lakh 50,000. Then variable overheads, which is 20. So 20 into 10,000 will give us 2 lakh. Then we have fixed overheads. So fixed overheads is fixed where we have 1 lakh. So 1 lakh will be applicable. 1 lakh will be fixed for irrespective of how many ever units you produce. So 1 lakh, and the cost per unit is given 10 for 10,000 units. So next we have variable, as per the question we have variable expenses direct, which is rupees 5. So 5 into 10,000 will give us 50,000. Next we have in the question we have selling and distribution, which is 13, and in 13 rupees 10% is fixed. So in 13, if 10% is fixed, 13 is the value. So 1.3. So 13 into 10% will give us 1.3. 1.3 will be fixed, and the remaining, so 13 minus 1.3 will give you 11.7. So the remaining is variable. So 1.3 into 10,000 will give you 13,000. 11.7 into 10,000 will give you 1,17,000. Next, for distribution expenses, as per the question what we have, 20% is fixed. So out of 7, 20% is fixed. So 7 into 20%, which will give us 1.4. So 7 minus 1.4 is 5.6. So 1.4 is for fixed and 5.6 is for variable as the balance. If 20% is 1.4 and the balance 80% will be 5.6. So now 1.4 into 10,000 will give you 14,000. 5.6 variable expenses into 10,000 will give you 56,000. So next what we have, administration expenses. So administration expenses they have given in bracket as 50 lakh. It is not 50 lakh. Please take it as 50,000. So 50,000 is the administration expenses. That means everything is being fixed. Nothing is classified as variable here. So 50,000 is applicable for all the units. So 50,000, 50,000 and 50,000. Only the cost per unit will change. So 50,000 divided by 10,000 units will give you 5. But when it goes to 8,000, 50,000 divided by 8,000 will give you 6.25. Then administration overheads, 50,000 divided by 6,000, 6,000 will give you 8.3. So based on the number of units fixed, under fixed cost, the total cost will remain same, but the cost per unit will keep on fluctuating. But when we talk about variable cost, the cost per unit will remain same, but the total cost will fluctuate. That is, the total amount will fluctuate. So now we have found out for 10,000 units. So when we prepare for 8,000 units, it is the same. The cost per unit for variable expenses will remain same. But when it comes to fixed, you should make sure that the initial manufacturing amount what you have got will remain same. So now I will explain it for 8,000 units. So now 70,000 is the cost per unit. So 70,000 into 8,000 will give you 5,60,000. And for labor, it is 25 as per the question. So 25 into 8,000 will give you 2 lakh. Then for variable overheads, which is 20 into 8,000 will give you 1,60,000. Then we have fixed overheads and variable overheads as per the question, where we have fixed and variable overheads. I'm sorry, we have variable overheads direct, which is 5. So variable overheads direct, which is 5. As I've told, when it is variable expenses, the cost per unit will remain same. For fixed cost, the units will fluctuate, the amount will remain same. So you can understand by this. Fixed overhead is 1 lakh. The cost per unit is 10. So now first we will pass on fixed overhead transaction. So now fixed overhead for 10,000 it was 1 lakh. For 8,000 also it will be 1 lakh. For 6,000 also it will be 1 lakh. So only the cost per unit will change as per the number of units. So 1 lakh divided by 10,000 will give you 10. 1 lakh divided by 8,000 will give you 12.5. Then 1 lakh divided by 6,000 will give you 6.67. So now when we go to variable expenses, which is 5, rupees 5. So here what will happen? Cost per unit will remain same. 5, 5, 5. So now with the number of units, the amount will change. So when you compare, for fixed, the total cost is same, but the cost per unit is varying. 6.67, 12.5 and 10. But when you come to variable, if you look into here, cost per unit is same, 555. Based on the number of units, the total cost will change. This is how you're supposed to account in your flexible budget. So the same thing will be applicable for variable expenses and fixed expenses. So if you know this technique, you can easily solve the problems. So now for 8,000 units, the selling price selling price expenses 10% fixed and 90% is variable. So what is the cost of selling price? 13 rupees. So 10% is fixed. So when it is fixed, initially how much did you get? 13,000. So 13,000 will be applicable for all. So now with this you will divide the number of units to find the cost per unit. So for 10,000 units we divided by 13,000 divided by 10,000. For 8,000 units, 13,000 divided by 8,000, you will be getting 1.625. Then for 6,000, 13,000 divided by 6,000, you will be getting 2.17. So now 90% is variable. So now 11.7 will remain same. As I've told, variable cost per unit will remain same. So 11.7, 11.7, 11.7. So divided by the number of units, you will be getting your variable total cost. So for distribution, it's again 80% variable. So 80% is variable, remaining is fixed. So now fixed, the total amount, that is total cost, will remain same. 14,000 for 10,000 units, for 8,000 units 14,000, and for 6,000 units it is 14,000. So 14,000 divided by 8,000 units, you have got 1.75. 14,000 divided by 6,000, you have got 2.33 as your fixed cost per unit. So here cost per unit is fluctuating, but the total cost remains same, which is 14,000. Then 80% is variable is stated here. So if 20% is fixed, obviously 80% is variable. So when it is variable, cost per unit will remain same. So what is the cost per unit for the initial production which is made? That is for 10,000 units. The cost of production is, the variable cost is 5.6. So 5.6 will be remaining same for the number of, irrespective of units. So for 8,000 it is 5.6. For 6,000 also it is 5.6. So now 5.6 into 6,000 will give you 33,600. 5.6 into 8,000 will give you 44,800. So now we have got our distribution, fixed as well as variable expenses. Next we'll have administration expenses, which is totally fixed. So if it is fixed, what is the concept you need to remember? The total cost will remain same. So what is the total cost? 50,000. 50,000 for 6,000 units, for 50,000 for 8,000 units, 50,000 for 10,000 units. So now the cost per unit will fluctuate in fixed. So 50,000 divided by 6,000 will give you 8.3. 50,000 divided by 8,000 will give you 6.25. So now if we add up the total expenses, we'll be getting our total cost. So what they have asked us, indicate the cost per unit at both the levels. They have asked us to calculate the cost per unit. So when we total up all the cost per unit for 6,000 units is 166.8. Then for 8,000 units it is 159.425, and for 10,000 units it is 155. So this is the flexible budget. So now the next question we are going to discuss is, draw a flexible budget for overhead expenses on the basis of following data and determine the overhead rates at 70%, 80% and 90%. Yes. So here they have given us 70, 80% and 90% to prepare the overhead to show up the flexible budget for the overhead expenses. And they have given information only on 80%. So now we need to find out for 70% and 90%. They have variable overheads, indirect labor, stores including space, semi-variable overheads, power. They have clearly stated in the bracket 60% is fixed and 40% is variable. Then they have given repairs and maintenance 2000, 60% is fixed and 40% is variable. Then fixed overheads, under fixed overheads, depreciation, insurance, salary, estimated direct labor hours is given, which is 1,24,000. So now let us get into the solution, how to prepare this. So now here they have given us variable overheads. They have given us, you also have semi-variable overheads, where semi-variable overheads are where power, repairs and maintenance are semi-variable overheads. So then under variable overheads you have indirect labor and stores including. And they have given only information on 80%. We need to find out on 70 and 90. So now let us classify and put into the flexible budget. So flexible budget particulars 70, 80, 90%. First is variable overheads. So under variable overheads you have indirect labor, stores including space. So indirect labor is how much? 12,000 and 4,000 for 80%. So now 12,000 and 4,000 for 80%. So now what you can do is you can cross multiply. So you can cross multiply here. For 80% it is 12,000. Then for 70% how much is it? So using this Excel sheet, I will show you the clear calculation how to calculate the cross multiplication. So please listen to it. So as per the question, for 80% variable overheads, indirect labor is 12,000 and 4,000 for stores. So if you look into the question, you will understand where it is stated indirect labor is 12,000 and 4,000. That is what is taken here, which is 12,000 and 4,000. So now 12,000 and 4,000 is it for 80%. So for 70% we will cross multiply. So as you all know the cross multiplication, I will show it here. So you need to always understand the cross multiplications like this. For 12,000, as it is for 80%, if it is 12,000, then for 70% how much is it, is what you're going to find out. So a question mark here. So it is a question mark or it is a nil where you're supposed to find out. So how will you calculate cross multiply? So 70 into 12 divided by 80 to find out the missing term. So is equal to 70 into 12,000, close the bracket. As you're using the Excel sheet, you need to be very careful in it, divided by, at the end, divided by 80. So which will give us 10,500. So for 70% it is 10,500. So the same thing we will be using here. So for 80% if it is 12,000, then for 90% how much is it? So it changes. For 90% how much is it? So it is 90 into 12,000 divided by 80, which will give us 13,500. So now stores. So for 80% if it is stores is 4,000, then for 70% how much is it? So 70% we will change here. For 80% how much is your stores expenses? 4,000. So now we can cross multiply. So when we cross multiply, we can, is the formula is 70 into 4,000 divided by 80. So we will be dividing by 80. So your answer is 3500. So for 70% it is 3500. So now for 90%, how much is it? So for if 80% it is 4000, then for 90% how much is it? Cross multiply. So how is it cross multiplied? 90 into 4000 divided by 80, which will give you 4500. So for 90% it is 4500. So this is your variable overheads. Now for semi-variable overheads, we need to look into the question. You have two semi-variable overheads, which is power and repairs. So under power and repairs, it is clearly stated power is 60% fixed and 40% is variable. What is the total cost of power? 20,000. So in this 20,000, we need to find out 60% is fixed. So how much is 60% of it and how much is 40%? So now as the power is fixed where it is 20,000. So how much is power? 20,000. So in this fixed is how much as per the question? 60%. So as fixed is 60% is equal to 20,000 into 60% will give us fixed, then the balance. So 20,000 minus 12,000 will obviously give you 8,000. So 8,000 will be variable overheads. So now again the cross multiplication is applicable. So now when the cross multiplication is applicable, so we need to find out for 70% what is the fixed and variable overheads of power, which is under semi-variable expenses. So now the same thing, cross multiplication will be applicable. So first we will calculate for fixed. So now for fixed, for 80% the fixed expenses were for 80% the fixed expenses were 12,000. Then for 70% how much is it? It is 10,500. So fixed is 10,500. So next for 80% if it is 12,000, then for 90% how much is it? So here you can find out where 90 into 12,000 divided by 80 will give you 13,500. So 13,500. Next again the same cross multiplication. This is for variable overheads. So for variable overheads for 80% if it is 8,000. Where did you get this 8,000? As per the calculation what you have done, where for 60% is we fixed and for 40% is variable, we got this out of 20,000. So now for 80% if it is 8,000, then for 70% how much is it? So we will have the cross multiplication, 70 into 8,000 divided by 80, which will give us 7,000. So next for 90% we will find out. For 80% it is 8,000. Then for 90% how much is it? Which is 9,000. So how did we get 90 into 8,000 divided by 80, which will give us 9,000. So we have found out for the fixed overheads. So the total of this will be the total value of semi-variable of power. So the total of this is 17,500. So 17,500 and total of your 90% is 22,500. 22,500. So this is your total power semi-variable expenses. Next, your repairs and maintenance. Again we have fixed and variable overheads. So how much is your repairs and maintenance value? Repairs and maintenance is 2,000. So 2,000 is your repairs and maintenance, out of which 60% is fixed and 40% is variable. So 60% is fixed and 40% is variable. So we need to find out how much is it. So how much is your repairs and maintenance? For 80% data only is given here. For 70 and 90 it is nil. So using 80 we will find out 70 and 90. That is what is your question, which is asked to be found out. So now total repairs and maintenance is 2,000. As per the question, fixed is how much? Fixed is 60%. So fixed is 60%. So variable is how much? Variable is 40%. So variable is 40%. So now is equal to 2,000 into 60% will give you how much? 2,200. So now variable 2,000 into 40% or 2000 minus 1200 also you can do, or you can again multiply with 40%, which will give you 800. So this is your variable and fixed expenses. So based on the percentage, out of 2000, 60% of it is 1200, 40% of it is 800. So now we will find out for 70% with the cross multiplication. So now for 80 percentage, the fixed overhead for repairs and maintenance is 1200. Where did you get the 1200? Through this distribution. Your fixed is 1200. Then for 70%, how much is it? Through cross multiplication we have got, which is 1050. Next, for 90%, we will do the same cross multiplication. So for 80,000, if it is 1000, I'm sorry, for 80%, if it is 1200, then for 90%, how much is it? It is 1350. So 1350. So we have found out for fixed. So now for variable, for 80%, how much we have got? It is 800. So for 80%, if it is 800, then for 90, I'm sorry, for 70, how much is it? 700. Then for 90%, we will be calculating. If for 80, if it is 800, for 90, how much is it? 900. So now we have got our total fixed as well as variable overheads. So we will write up the total overheads for repairs and maintenance. For 70%, it is 1750. You can add it up and confirm. It is 1750. Then for 90%, it is 2250. So this is your total repairs and maintenance expenses, and also the classification of fixed and variable overhead is also shown here. Next, we will come to fixed overheads. In fixed overheads, the amount will always remain same, only the cost per unit will fluctuate. So as here we don't have cost per unit, so the amount will remain same for all the units irrespective of the capacity. So what is your fixed overheads in your question? It's fixed overhead, depreciation, insurance and salaries. So your estimated direct labor hour is given. So we do not require our estimated direct labor hours here, because in the question they have not asked us anything to be calculated using the labor hours. We can find out the cost per overhead rates. I'm sorry, this estimated labor hours is given to find out the cost overhead rates. So with the total overheads, we will divide with the number of labor hours. So we will get, based on the percentage, we will be getting the cost per unit. So now, so the total fixed overhead depreciation is 11,000, 3,000 and 10,000 for salaries. So for depreciation, it is for 80% what they have given, 11,000. For insurance, it is how much? 3,000. And for salaries, it is 10,000. So as it is fixed, it will remain same for all the three capacity. So now they have given us variable overheads. So what they have asked to determine, if they have asked us to determine only the overheads, then fine. So they have asked us to find out what is the overhead rate. So we need a denominator to find out what is the overhead rate. So we know what is the total cost. So the total cost for this will be for 70%. Let us calculate in this Excel sheet itself. So so the total cost what we have got is, under variable overheads, we will do the calculation. So before we total up, there is slight changes what we have supposed to make. So as I've already told you all, flex under the cost sheet what we are preparing, fixed cost amount will always remain same. So now in this problem, have we followed the rules till now what we have worked out? No. So if you note, fixed overhead is different. So we have calculated as the same calculation how we have done for variable overheads. So please do remember that we shouldn't, usually when you calculate, you will calculate everything together and you will do the calculation. But always remember, when we are dealing with fixed expenses, the fixed expenses amount will remain same irrespective of the number of capacity. So now for 80%, how much we have got? 12,000. So as we do the cross multiplication, we have done the cross multiplication and we have assigned for 70% fixed and 90% fixed. But this is not the way. So it should always be 12,000, 12,000, 12,000. So whatever the capacity is, the amount of the fixed will remain same. So it is 12,000 for 70% as well as 12,000 for 90%. So next we finish under power our variable expenses. Now under repair, also what we have done, we have cross multiplied fixed overhead as well. So it is different here. So always remember, fixed should remain same irrespective of the capacity. So initially what was a fixed expense? 1,200. It will remain same for 70% capacity as well as for 90% it will remain same. So now this is our fixed expenses and variable overheads. So if you look into here, if your fixed expenses under power is same and your fixed expenses under repairs and maintenance is same. So please don't get confused with this. So I have done the calculation showing how to do the cross multiplication. But when it comes to cross multiplication of fixed, cross multiplication is not required because the capacity or the amount of fixed expenses will remain same whatever will be the capacity. So now under fixed overheads, all the expenses are fixed here. So 11,000, 3,000, 10,000, irrespective of the capacity, the number of units are same. So now the totals will change. So now we will calculate the total and find out what is the overhead per. So now we have got our total overheads. So total variable overheads for 70%, 80% is given, which is 14,000, 16,000 plus and 80,000. Then for semi-variable, we have added up power, which is 19,000, repairs, which is 1,900, both fixed and variable. So the total semi-variable 19,000 plus 9,900 will give us 20,900. The same way for 80% capacity as well, 20,000 plus repairs and maintenance 2,000, which will give us 22,000. Then for 90% power 21,000 and for repairs and maintenance 2,100, which will give us 23,100. Then fixed overheads, the total for 70%, 80%, 90% will remain same, which is 24,000. So now we have added up the total for all the capacity. Variable overheads plus semi-variable overheads plus total fixed overheads, which will give us 58,900. The same thing will be added up for 80%, total variable overheads and total semi-variable overheads for 80% and total fixed cost, which will give us 62,000. Then for 90% also total variable overheads, then we have total semi-variable overheads for which is 23,100. Then total fixed overheads, which is 24,000, which will give us 65,100. So now what is the overhead rate we are supposed to find out? So overhead rate we are going to find out based on the labor hours. So now the labor hours which is given is 1,24,000. So this 1,24,000 is for 80% capacity. Yes, so we will find out for 80% capacity if it is 1,24,000. Then for 70% and for 90%, what is the estimated direct labor hours we need to find out, and then we will be finding out the overhead rates. So now let us find out for 80% if the labor hours is 1,24,000. So 1,24,000. Then for 90% it is 13 lakh 1,39,500. For 80% it is 1,24,000. Then for 70% we will find out for 80% it is 1,24,000. Then for 70% how much is it? 1,08,500. So now we will find out the cost per unit. So this is the labor hours for which this is the labor hours. So as we have got the labor hours, we will find out the overhead rate. So total cost, that is 58,900 divided by 1,08,500, which will give us 0.54. And for then overhead rate for 80%, 62,000 divided by 1,24,000, which was 0.5. Then we have for 90%, 65,100 divided by number of labor hours, which is 1,39,500, which will give us 0.46. So this is the overhead rate for 70%, 80% and 90%. So thank you everyone. The other problems will be discussed in the upcoming videos.